Well, ladies and gentlemen, he's back. Yeah, I'm starting a little bit early, but what can I say to you? So, Powell touched up on a couple of important things in his speech earlier on. And he was talking about the idea that supply shock will be something that the Fed will struggle to contend with. You see, what you got to understand is, yeah, we've got the US-China trade deal and it's all happy days with that. But we actually haven't seen the impact of what these tariffs are actually going to do to the economy. At what point is the Fed going to actually start making a move? Now, they are expecting 2 rate cuts this year. But the problem is, the tariffs are still there. That's the issue. And it's like this shadow on the back of your mind, like it's just looking over. That's the problem with these tariffs. Where does it leave Bitcoin? Bitcoin has not been doing anything good today, ladies and gentlemen. It went positive, it went negative, and then it's just now negative. But Bitcoin likes to do this. Now, tomorrow we've got some important data, which is the preliminary consumer sentiment. That's going to be a measure for the Federal Reserve at understanding the nature and the behavior of the consumer. The main thing that they're going to be looking at is, of course, the consumer sentiment towards inflation. If people are expecting the inflation or prices of costs of goods and services to go up, they're naturally going to start behaving in a way that's going to be somewhat more reluctant. In other words, they're not going to be spending money. Goodbye, economy. When the consumer stops spending, that's when the Fed starts to pay attention. What's their mandated goal? 2% on inflation and price stability. How do you maintain price stability? Well, the only way you can do that is if there is a happy medium between consumers and manufacturers, retailers. If manufacturers and retailers are having to increase the cost of their goods, then the consumer's not going to be happy about that. So the consumer's not going to be spending. He's not going to be taking on credit as much. Why? Because it's getting expensive. Now, the only thing or the saving grace that the market has is the fact that oil's prices are low. Now, can you imagine if we then go into a little bit of a story with oil and that starts to go up? Oh, my days. That's going to be an interesting one. What we're going to do tonight, ladies and gentlemen, we're just going to have a brief look at where we are with price action across the board with several assets. If you are involved in the game of investing, this live stream will probably serve you at helping you understand where money is going. Because before you even start buying Bitcoin, because a moon boy put it up on X saying that this is going to go, bro, Chad, and all that stuff, let's be honest now, they're not putting your money down. You're putting your money down. So the only way that you can at least improve the chances of actually capturing something and earning a little bit of cheese is if you have an understanding of how money is moving. Because fundamentally, you can see that the fundamentals that are coming out, or macroeconomic data, has got investors all over the spot. And hopefully by the time I'm done with this live, you guys should have a good understanding of what to expect. Capiche? Okay then. So, £6 for a coffee and it only costs 50p max. It's less than that, bro. It's less than 50p. Oh, God, here we go. Great bearish title. Get out. It caught your attention because now you've put down the following. What about the great PPI and CPI, these tariff deals coming in? I think Powell talks utter rubbish to wind Trump up. This is true, okay? But yes, the PPI is coming in good. Yes, cost of goods and services is down. You've got a trade deal with China, but you still got tariffs. He's paused them. What happens when you press the pause button again? It carries on. We haven't even got the Eurozone story yet. That's been kept behind the scenes. And they're already getting ready for countermeasures, on tariffs on the Eurozone. So Euro is next. And Japan, he's changing the goalpost again for Japan. And the Japanese yen is a very important asset because it's deemed as a safe haven. Some people call it Japanese gold. Because whenever you're concerned, where'd you go? To gold, safe haven. That's what everybody knows in the legacy markets. This is just a correction after a big move up. Relax, people. Don't be so emotional. You know what? I agree with Dylan. Why? Do you know that the Dow Jones is still up around 62% for the last 5 years? It's just a correction. See, the problem is when everyone's bearish, or I'm bearish, apparently, right? I'm a trader, man. I don't care if it's bearish, bullish, donkeyish, piggish, whatever. I look for movement. And if my information that I provide to you gets you a bit of movement and you manage to grab it, happy days. You've made a bit of change. Let's break it all down, ladies and gentlemen. Here we go. So, SP 500 rises as Fed cut bets sink Treasury yields. I wouldn't call this a sink of the yields. No. We ain't gone anywhere. 2-year yield, 3.965%. 10-year yield, 4.449%. That is a wild spread. Okay? It's not good. 30-year, 4.9 with a high of 5%. Look, you know when I say about the 10-year government bond, right? When that 10-year yield hits 5%, you'll understand what bond purchases is all about. Druckenmiller is waiting for 5% before he gets rid of his short position. He's getting ready to buy all the bonds up again. I'm telling you. Look at how well it aggressively moved from 5%. That got everyone's attention on the 5-year. They've locked it in at 5% nearly. Happy days. Did we hit 5%? We did hit 5%. 10-year is on its way towards that. This is just a bit of a correction based on today's data. Okay? Now, when we go into it, Jerome Powell, this is the story about supply shocks to help you understand, okay? And this is what I'm going to reveal here is going to help you understand where money is likely to maneuver to. So, talks about this. He said today that he quietly admitted the economy was entering a period of more frequent and potentially more persistent supply shocks, okay? Powell also believes the US economy could experience volatile inflation, warranting more open communication practices from the central bank, right? And he says the central bank boss expressed concern over what impact President Trump's tariffs would have on inflation and economic growth. What's going on with my live? Hold on. What is happening here? Is the live on? Yes, it is. Okay, cool. So, Powell, higher real interest rates might reflect the possibility that inflation could be more volatile going forward than the inter-crisis period of the 2010s. All right, then. Now we have to go to the chart. So we know supply shocks, okay? Problems with the tariffs, because the tariffs are all about who's going to get what at what price. And if there is a little bit of inconsistency with who has got access to supply, then that's when the tariffs will then start to show its color, okay? Now, going into it all, this is what you got to look out for. First things first, if you're trying to understand where everybody is going with their money, we go over to this article or this platform right here. You can join this. It's free of charge, the CME group. Everybody gets access to it. It is free. Now, let me explain where we are right now. Euro. Hold on. Bloody hell. I should be in bed. Anyways. So today, right? You can get, for 2 days, you can earn yourself 48.17%. This is just stupid rates. Absolutely wild. And that's on the euro. 102% on the Japanese yen. So just lately, the euro has been deemed as a safe haven. The euro and the yen has been deemed as a safe haven as well. Okay, well, yen is a safe haven. But look at where interest is going. These guys are trying to find yield. Do you understand? When it comes to bonds and the yields market, everybody's interested in yield. Why should I put my money in euros? Well, 48% is one of them. Why should I put my money in yen? 102% is one of them. So when you're then looking at Bitcoin's price and saying to yourself, oh, Bitcoin, why aren't you moving, man? Is it because, the ETF, what balance is that at? It's not doing anything. It's still at this 620,000, okay? No real activity. I mean, we're looking at it. We can see that there's been some maneuvering about. I mean, BlackRock, Coinbase sent another 149 Bitcoin to BlackRock, okay? And looking at, I mean, that's pretty much it. So there's not really any real activity going off. But looking at Bitcoin's price, you can see it's just not doing anything. It seems to be respecting the Asian session range, which is very important for us. But we are going into some big announcement tomorrow with the preliminary consumer sentiment and the preliminary inflation expectations, okay? So what is it that we know right now? Bitcoin's going sideways. The stock market takes a nice move to the upside to only give some back and come back in again. So it's not really going anywhere. All right. We've had great news about this story with Saudi Arabia, and they're committing $1.4 trillion, whatever it is. Okay. And that's going to be over a period of 10 years. Okay. So we're going to be sitting tight with that. That's them going into bed, getting into bed together. Right? That's it. All right. So 1.4 trillion, not next week, over the period of 10 years. When you think about it, that's not that much. It's not a lot over a 10-year period. Debatable. Where are investors' heads at? Volatility index right now is trading at 17.7. Okay. So there is complacency across the board with investors looking to hedge themselves. But hold on a second. Are they hedging themselves? They're not even buying US bonds. This little retrace back up is nothing. We need it to come and close this gap. So then going back into the article over here about Powell and the shock supply, then it then goes over to the idea of where we are with the core CPI and, of course, the current data with the core PPI itself. Just look at the nature of what's going on in front of you. I'm showing you the last few readings of the PPI. This is what the Fed's problem is. And this is where you're going to understand when everyone's expectations of interest rates is going to go up or down. Look, minus 0.1% was the last reading in April. March, minus 0.1. Then all of a sudden, 0.3%. Then 0.0. Then 0.2, 0.3. 0.2 plus 0.3. 0, 0.4, 0, 0.5, 0.2, 0.3, 0.5, 0, 0, 0. I mean, we're going back into like 2023 now. What am I trying to get at here? There's no consistency. The fluctuations between the core PPI from one reading to the next shows you that there is an imbalance, that things aren't operating the way they should. 1 minute it's great, 1 minute it's not. Manufacturers increase the cost of goods or services aggressively, and then you've got 0.3% reading right there. And then all of a sudden they instantly drop it down again because there's fear. Consumers are starting to behave differently. They're starting to get savvy to, why should I spend my money over here? Look at the interest rates on the US dollar. They're too much. Money's expensive. Going over to your dollar right now, is it worth holding dollars? Well, you nearly got a nice little appreciation on the dollar this week, but now it's just stuck at the 100 mark. So you are earning 0.34% appreciation on your dollar. That's why no one's interested in the bonds, because there's no point in even holding US bonds. That's why it's more favorable to go over and pick up maybe a Japanese 10-year bond, but the yield on that one is going up. And the higher this goes, the more likely the Japanese are going to start increasing their interest rates, which is going to do what? It's going to increase the value of the yen, which means carry traders are going to have a hard time. So they're going to have to get rid of their stock, which is probably what they've been doing. When prices are rising, they're selling. This is why Goldman Sachs has said that this is consistent with rallies in bear markets. Now, let's just go over and have a look at where we are from the market surge, okay? Quickly open this up and let's have a look at where we are in terms of volume to understand accumulation, right? This is going to help you understand if you should buy Bitcoin or not. I mean, volume above average and prices effectively getting close to closing negative. It's not good. So yesterday's gains were equally met with volume above average to the downside. So that right there is a distribution day. It's no good. Now, it could be some profit taking. Let's quickly go over and have a look at what's going on in terms of sentiment. Risk on, off. Technically, risk is off. They should be putting their money. It's negative, okay? When it goes over the dashed line up here and it turns black, happy days. Risk is on, okay? This rally upwards It's wonderful, but tariffs are not live yet. So going back to the story of Fed, they are concerned about the future. And Powell has just solidified why the bonds market is not moving and why it's going down. Do you understand the volatility of the bonds? It looks like a meme coin. This isn't right. You can't have such volatility in the bonds. The yields themselves, spikes in the yields. That's no good. That shows you that it's not stable. Now, I've said this before, ladies and gentlemen. Okay, hold on. Where's my thing? I've said this to you before. We need a catastrophic event for Bitcoin to really come through. We really do. Bitcoin's not subject to tariffs. What have the tariffs got to do with Bitcoin? There's nothing to do with it. And the reason it's got nothing to do with it is because they're not exchanging import-export duties in Bitcoin. Naturally, if they were paying in Bitcoin, it would have an impact on Bitcoin. So why is Bitcoin not doing anything? Why does Bitcoin go down when the stock market goes down? Well, if Bitcoin doesn't go down when the stock market goes down and then a day later it goes down, the decoupling story, it doesn't make sense, does it? So it makes you think to yourself, what can I do? Now, from a structural point of view, when we look at Bitcoin, yeah, it's at these highs and we've got a massive imbalance down here. Go to the daily time frame to put it into perspective for you. Yeah, you've got a nice sharp move in Bitcoin, but it's not really following through. However, looking at the order flow, let's quickly go and log into this bad boy. Looking at the order flow, what do you see? What we actually see is commitment from the bids, commitment from the offers. Here's your iceberg order. 42, where is it? There you go. I just saw it. 40 million, right, to be sold. For God's sake, man, I hate this. So unresponsive. I don't even know. There you go. 40,095,000 to be sold at 104,100. Okay. That's 40 million up there. 16 million at 104,541. Keep on going up. Do we see? Oh, there we go. We see another 42 million right there at 104,800. Now, if you remember, okay, over here to the left of the chart, there was already another 42 million that was sold over here. Okay. And I was explaining to you all about the iceberg order, okay, in this week's videos. It's back again. So there's a participant that wants to sell his Bitcoin in this range, okay? Very simple. Just trade price action as we are just traders. Honestly, what is the point of all these fundamentals? Because the reason why I'm talking about these fundamentals is because there are spot players in this live stream. There are people that go on spot with Bitcoin. Okay. And the only thing is you can just rely on price action alone, but then you're going to ask yourself, why does Bitcoin go down when the yields go up? Okay. Why does Bitcoin go down when the tariffs come into play? Yeah, you can just trade price action, but we are in a macro driven environment. That's the problem we've got. And the only reason we're in a macro driven environment is because everyone's waiting to work out what they're going to do with the interest rates. Because why would anyone want to borrow US dollars right now to go and buy Bitcoin? They wouldn't, because you've got a depreciating dollar and you've got high interest rates on the dollar itself. And when they start printing, what do you think is going to happen? Yeah, inflation's going to go up. But we found that when they're not printing, inflation's still going up. And now we've got tariffs, which will actually lead to inflation going up. Supply shock, according to Powell. It's equally important to understand why investors would put money to work. And if they expect that the interest rates are going to stay like this, then that means that investors are going to go into assets like this. Euro. They're going to go into assets like the yen. They're going to go into assets over here. Yields on the government bonds, German. The yields are down. That's good news. Why? Because they're buying European bonds. Why? Because it's cheaper. Why? Because you only pay 2.4% on the euro and 0.5%, less than 0.5% on the Japanese yen. What douche is going to go and buy and borrow money at 4.5% when the appreciation of the dollar itself is absolutely dog? Doesn't make sense. And this is what Jerome Powell is concerned about. How's he going to maneuver around this story? Yeah, the data that's coming out is suggesting that things are looking great. But inflation came down last time. It was 2.4% and the market dropped. That doesn't make sense now, does it? That's the story we've got, ladies and gentlemen. Any questions? Any questions? Do we have any questions? That imbalance, possible later for now. I keep accumulating small dips, selling to the moon boys up here. Okay. Do you still believe that Nvidia is going to $90? Well, the logic is right. If let me just go to Nvidia right now. Nvidia has got it's had some great news. Okay, it's had some great news in regards to this story with Saudi Arabia. And there is a lot of involvement with AI, and everyone wants to get involved. I've got a price projection of Nvidia to hit $500 a share and $6 trillion market cap. Okay, right now it's nearly at 3.5. Okay, double the price of that now puts you to around 270 as such. Okay, well, sorry, 270 or something. All right, let's round it off 300. All right, that should take you to around, say, if we go to let's say if we go to $270, roughly speaking, we'll probably hit around $4.5 trillion market cap. Double that puts you at about $500. You get about $6.5 trillion market cap easily for Nvidia. Easy. It's the leader. All right. To go down to $90 right now, I mean, we've got green vector candles right here. It can easily do that. But you've got to remember, when prices are rising, they're selling. They buy the dips and then they sell the rallies. Where do you think they coin these terms from? Just look at Bitcoin. You got dudes that want to sell $16 million worth of Bitcoin as price rises. They ain't selling it when price drops, unless that's what you do with investments. You sell them when they're dropping. Yeah, that's what you do. That's fine. Doesn't make sense to do that now, does it? You want to wait until it rises. That's the story. Looking at Bitcoin on the daily time frame, ladies and gentlemen, it seems to be doing very well around the 5 and 13 EMA. And as long as it can sustain itself within this range, then Bitcoin does have the promise of going higher. The problem is Bitcoin's going to go up on good news. That's the issue we've got. The NASDAQ today pumped up, okay? It did make a nice move, but it's pretty much given back those gains. And that shows you that it's not a solid move. It's not even been able to look. It's barely trading above yesterday's close. Look, it's still within the wick. And that's no good. If this trades negatively, it's then a solid distribution day. That's not good. All right. So they're effectively selling. Look at this gap. You don't think NASDAQ's going to come back and eat this gap all day? Mark my words. NASDAQ is going to take this gap clean. You know, massive gap. Huge. They'll eat that gap. And there's nothing wrong in that. Where's my vector candles? There's no vectors. This is retail. Let's just confirm that. Dumb money confidence is very optimistic, and smart money confidence is neutral. This suggests an excess return of minus 0.6% over the next 2 months. So if you invest in the stock market, you're going to be down 0.6% over the next 2 months. Yeah? Let's look at smart money. Dumb money is getting very optimistic, which is red line. Let me expand this out for you. So Mr. Gentleman down here who said he's a value investor, this is important for him because value is based on perception, okay? Perception is based on its point of view, and value is someone's point of view that they think that price of this asset is worth it. Company behind this asset is worth it because X, Y, and Z. This is a representation of people's perception of value right now. Dumb money's going up, smart money going down. When the blue line goes down, prices go up. What do you think they're doing? They're selling. When the blue line goes up, they're buying. And what's been going on? They've been buying everything up as it's been pulling back. And now prices are going up, they're selling. And who's buying it? Retail. If data shows inflation staying tame and the labor market softening, pressure will mount. A cut could come in Q3, Q4, unless something breaks first. It's already broken, and we already know it's broken because of the yields. That's how you know it's broken. The yields are not making sense. Spreads are too wide between the 2-year and the 10-year. No one's buying US bonds, and the logic for a recession is mounting. Let's go into this article over here. Where does it say? Wall Street traders drove stocks higher as bond yields sank after the latest economic data spurred bets that the Federal Reserve will cut interest rates at least twice this year to prevent a recession. All right, let's just go and have a look at the rate cuts. This is June, yeah? Expectation of the next meeting is going to be 4.25, 4.5%. 91% chance that they're going to stay at those rates. Go to July. Here we go. What we got? 61.4% in July with the expectation. This wasn't actually right. This was actually 38%. Okay. So now it's 4.25%, 4.5%. All right. It was skewed towards this one. Okay. 4%, 4.25. Right. So now you've got effectively the next 2 months expectation is 4.25, 4.5%. Go to September. All right. These are all FOMC meetings. 25% chance that it's going to be 4.25, 4.5%. We're going into the last quarter of the year as we go into September, right? Okay, cool. So they're expecting 25% chance that it's going to be at 4.25, 4.5%. 50% are betting that it's going to be around 4 to 4.25%. As we go into October, look at the distributions. Now they're going between 3.74 and then 4.25. Awesome. We go to December. Now we've got a range. We've got a big range of where investors think interest rates are going to be or what the rates are going to be by that point. Okay? But we know for the next 2 months, from 18th of June, 91%. And then we've got July, 61%. We know that the next 2 months, the interest rates are pretty much going to stay at 4.25, 4.5%. That's on the premise that any data that comes out regarding the US economy, because what you've got to be careful of is unemployment claims are coming in line with expectations. So if they've still got a strong labor market, okay, that's one factor that can lead to inflation going up. That's one factor that's naturally going to make the core PPI come out again next week, so next month, and it be the same story where they increase their prices again. Why would they do that? Well, we might have some developments on the tariffs. We don't know what the story is with India. We don't know what the story is with Euro. We only know the story is with China, and that's the world's biggest factory. So investors are cool with that. But for me, ladies and gentlemen, if we just go into next week, look at next week's data. If we just pull up for the US dollar itself, let me just get rid of all of this stuff here. Get rid of all that and just keep the US dollar. Look at what we've got next week, okay? Where is it? Is that all we've got? No. There we are. So next week, hey, what's going on? Monday, Tuesday, Wednesday. Why have we got nothing? Oh, wow. So okay, I've removed I've removed other currencies. So the US dollar next week, unemployment claims, flash manufacturing data, flash services PMI, existing home sales, new home sales. So this is going to tell us where we are with the economy. They're expecting 50.2%. Okay, that was the last reading. They haven't put any expectations out yet, but if this comes in negative, the Fed has to do something because the manufacturing sector is slowing down. And if the manufacturing sector is slowing down, what do you think is going to happen to the PPI next month? They're going to increase their prices. What do you think they're going to do? If business is slowing down, you're getting less people coming in. You're going to have to increase the cost of your goods because the cost of doing business is now going up because of tariffs. And what's the consumer going to do? He's either going to have no choice but to take on those services and those goods, or he's just not going to be purchasing them and be a little bit more savvy with his cash, which is naturally going to lead to what? The idea of recession. Contraction all over the place. We've contracted on the GDP, but there's no chance of going into a recession. Makes sense, but anyway. Yes, I'm fully aware of that, Antonio. That I'm fully aware of, my friend. Okay. I don't think they will drop it until the bull market is over. They always cut rates in emergencies. Listen, they are not going to cut rates until they hit 2.2%. In my opinion, I don't think they're going to cut until they hit 2% on inflation. I really think, because look what we've got a rally now. We've got a rally. Data's coming in bad. We need a little bit more data to say it's bad. And then by the time the next CPI reading comes out, bang, it goes down to 2%. That will trigger the rate cuts, in my opinion. In my opinion. Tino, insights on USD JPY. Insight on USD JPY. Dollar yen. Dollar yen's not really doing anything. It's currently testing the 800 EMA, but it's still within this region. If the dollar yen goes up towards Forex intervention ranges, okay, so that's anything above 150, 154, okay, then, I mean, Trump right now, he wants to speak to Japan to try and get them to stop doing Forex intervention, because he pretty much Japan controls the dollar when you think about it. It does, because the dollar is what they use to take advantage of the carry trade, take advantage of the fact that that nation offers the cheapest rate of interest. That's why the carry trade is so important with the Japanese yen, okay? And Trump wants to stop that, because then it then forces investors to not sell the dollars and go to yen, okay? Or sell the yen to go to dollars, all right? Plus, there's that story with trade, okay? The Japanese can't really afford to have an appreciating yen. That's why it's deflationary. They want it to go down. That's why it's trading at 0.000, okay? But dollar yen, it's like, it's back and forth with Japan and the US, and it's just pure currency war between them. You think the euro's really the problem? Nah, I think the euro's the biggest contender to the dollar, all right? But it's really the Japanese yen. You don't see the European Union buying tons of dollars just to deflate to stop the idea of the dollar going up. No. But you see the Japanese buying tons of dollars when dollar yen is rising. Look, it's a segment right here. Wait a second. Look, if I just go into it. Japan FX intervention. Look. Purchase of USD. Each of these blue lines right here. Go away. Each of those blue lines is an intervention. That's how you know Japan have got the dollar by meat and two veg. That's what it's done. And that's what Trump wants to stop. Anything else? Tino, sharp move on gold today. That's crazy. Any reason why? Matthias. Is that you, bruv? You asked that question. You have asked that question. Nah. Nah. I'm not happy about that, Mathis. I am not happy about that. Right. Class begins. Why does gold go up? Come on. Why does gold go up? I want to know. Give me your thoughts. Come on. No, it's not a dumb question. No, he shouldn't be asking that question because he knows the answer to it. He's a platinum member. And even in the Discord, I've said it before, okay? I've said it to all of you guys as well. What two reasons does gold go up? Safe haven. All right, we got the hedge against inflation. Yeah. But safe haven, okay? It's looking for safety. That's correct. All right? Someone say it. Someone say it. Not recession. That's part of safe haven. Hedging is the result of it. No, people, not risk off assets. No, not war. That's a reason for a safe haven. No, someone say it. Not vectors. Bonds crack. No. Why does gold go up? No. We know what is a safe haven. We know hedging is part of that. Not banks buying. Why would it go up? Why would gold go up? Two reasons. One, because it's a safe haven, because investors want to hedge themselves against the concern of war, inflation, and what have you. What other reason does it have? Someone say it. I'm looking at the response here. Inflation, store of value, no. Because your wife loves it, no. Interest rates. Someone said it. Where is it? Where's this guy? Where is he? Interest rate. Where's my interest rate guy? I just stop chatting. Stop typing. Stop. Where's that comment? Interest rate. Interest rate. He said it. The guy who typed in interest rate. Okay. Okay. The guy who typed interest rate. There you go. If the expectation of interest rates on the dollar is going to come down, why would you retain dollars? Because you're losing yield, even though gold is a zero yielding asset in principle. Why would investors retain US dollars at the thought of knowing that they're going to lose yield because they're cutting interest rates? That's the inverse relationship with gold and the interest rates. Interest rates down, gold goes up. PPI came in lower, suggesting the cost of goods are going lower. That means inflation is going to come down. That means what? Interest rates are going to get cut. That means gold goes up. If we had a PPI reading today showing that prices were higher, okay, and that inflation has a better chance of going up, okay, then naturally the yield on the dollar would remain high. So then investors won't need to go into gold. But because it's motivated by interest rates, the expectation that they're going to cut in, look, Bloomberg said it to you. Fed cut bets sink treasury yields. Fed cut bets sink treasury yields. Gold goes up. Okay. A question here. Hold on. 95 or 109K first in your opinion. So you're basically asking me what the weather's going to be like in the next, how long? Look, man, I can't tell you if Bitcoin's going to go to 109 first or 92 first, okay? Let's just look at price action. I've got an imbalance right here on Bitcoin, all right? So if they're really going to move higher, they're going to come down and buy it first. Look at your bids. Your bids are coming in. Your bids are all coming in. 16 million down there. Okay, we saw 60 million a second ago. There you go. 101,000. 6 million, 7 million, 3 million, 4 million, 2 million. But that doesn't mean anything because I can guarantee to you if Bitcoin drops down right in these ranges here, if Bitcoin goes down to around 101,000, I guarantee to you, you're going to get someone that steps in with a market order and buys 30 million of it because that's what they've been doing in this range all along. They've been buying up Bitcoin in this range. Okay, so just take that into consideration. Wait a sec. Yeah, all of this. That's what they've been doing. They've been buying it up in those ranges. Okay? Now they're going to want to sell it too. So yeah, to answer your question, what is it going to do first? If I knew that, then I'd tell you what it is. But we will never know what it will do first. All we can work with is how likely it's going to continue doing what it's doing. When you got sideways movement and you got wicks all over the place, it's just them grabbing liquidity up and down, sweep galore, liquidations galore, ladies and gentlemen. So yeah, that's the story. Tino's the type of guy to buy water in the store and set it free into the ocean. What a guy. What's the weather going to be like in your opinion? I don't give a damn about the weather, man. I couldn't care if you asked me that. All right, ladies and gentlemen, if you are new to this live stream, make sure you go to tradersreality.com, download this PDF. It's free of charge. You know, tells you everything about the hybrid system. It's going to help you understand why Bitcoin will recover this vector candle. We won't know when, but we're going to be seeing how it will do it. All right? There are people here. They're happy to buy, but they're equally happy to sell, which is why it's not going up yet. But positive news will send Bitcoin higher. Expectations will send Bitcoin higher. If that keeps on getting changed, then look at your NASDAQ. It's not doing too good. You know? It's not doing too good. I flipped an account today. Okay. I came back. I saw an opportunity on the NASDAQ and I traded. This is a live account. I had 5K in the account and then I flipped it, made 5,410. If you can zoom in and have a look, it's a live personal account on Ninja Trader. No copy trading. It's personal account, no funded programs or anything like that. Flip accounts. Okay. I'll withdraw that. Start again. Keep doing it. Caught an opportunity on the NASDAQ. Now, what did I understand about that? It was just NASDAQ was just going up. I saw an opportunity and I took it. Went onto the 1 minute time frame. Okay. When they came away from a nice little structure like this. It was this area here on the order flow. They were marking up, showing nice trends. Red vectors getting recovered. They kept on going. Just played the zone and they went up. They just kept on going up. The order flow was showing me that kept on rising. Green vectors kept coming in. Does understanding price action or the macros have anything to do with me from here to about this point up here? It was about 21,500 from 21,388. That was the rough average entry. Okay. So this move here to that move there. Let's be honest now. Does macroeconomic data actually help me exploit that move? It doesn't really. But the perception of everything that's happening across the board, okay, makes people do something. So when you have an understanding of that, it keeps you in trades. Because if the bias is positive, for every dip, it's going to come back up. And when it's all happening above moving averages, you add weight to it, confluence is coming to play, happy days. Walk away with nearly a 5.5 grand day. Awesome. And that wasn't too long either. How long was that? 4:30 till 6. An hour and a half. Done. Don't need to do anything else. After that, yeah, it rolls over. Could have exploited that too. No, thank you. I'm jet lagged. I'm done. Anything else, guys? Anything else? Yeah, just download this. Download this. Follow this whole thing right here. All right? And if you're going to be a platinum member where you get trade setups, applying the logic of the hybrid system, then you go over to the memberships tab over here. Join, click the join button, and then it will take you over and show you exactly what you get as a platinum member. All right? Cool. Anything else? Tina, do you think we could see another Bank of Japan action like August 5th? Yeah, yes, we are. I think we are. We are, because the Bank of Japan needs to retaliate if Trump's going to be a bit of a pain in the ass with the tariffs. And they've got inflation going up as well. So, and remember, with the Bank of Japan as well, just to finalize it all, when their yields keep on going up, it's not sustainable for them. They can't have such strong yields. And the only way that their yields will come down is if people convert yen, okay? If they convert into yen, right? And how do they do that? Well, they get rid of their dollars or any exposure, which is why it's not making sense, this rally to the upside. It's not making sense. Your dollar's not worth it. Do you understand? Investors are buying news. Doesn't make sense. Your dollar is pointless. Your yen is moving up. If the carry trade is working right now by Japanese yen, it means the yen should be going down because they're borrowing yen and converting it to dollars to then see the market go up. That's not happening. There's a problem. When the yen and the euro go up, so should the bonds. That's what happens. You go back to the 5th of August, what happened? Euro up, 10-year bond market up, yen up, because investors were scared. So they went into the US bonds, okay? They went into the yen and they went into the euro. What you got now is the euro's up, the yen is up, the bonds are down, the dollar's down, stock market up. Inflation down. It's an absolute shit show. Mad love and respect, ladies and gentlemen. And I'll tune into you all tomorrow. Peace.